Welcome to Connect, the podcast for California MBA, where strategy, innovation, and leadership come together to shape the future of mortgage finance. This is where the voices and ideas driving our industry forward meet real world execution. My name is Paul Gigliotti, CEO of the California MBA. And if you're here because you care about building better for your business, your clients, and the future of housing. Before we begin, I'd like to thank our 2026 President Council sponsors whose support make these conversations possible. AmeriHome, Consolidated Analytics, Loan DNA, Funding Shield, CMG Finance, Guild Mortgage, Rocket Mortgage, Wiener Brodsky Kidder, and Western Alliance Bank. Today, I'm excited to welcome one of my new best friends in the industry, Nora Guerra, Senior Vice President of Community Lending Solutions at Guild Mortgage. Nora has spent her career focused on one of the most important challenges in the industry: how we expand access to sustainable homeownerships in ways that are practical, reasonable, and scalable, that actually bring a solution. At Guild, she leads work around community lending solutions, affordable homeownership programs, and partnerships that help bridge the gap between wanting to and being able to own a home. Nora, thank you so much for being here. Welcome to Connect.
Thank you so much, Paul. I love California MBA. I've always been a supporter, but yes, you're right. We are new besties, and we're going to do a lot of really great things together.
I think so. And in fact, we had a great time. It was the first time that we've had face-to-face interaction in time together at the National Advocacy Conference. We were in the same group and we got to walk the halls of the Capitol and do some really good work. And it was really great to hear your perspective and share how, as a nation, we are really still struggling with affordability. Programs are out there. We have to make access to these programs front and center for our industry and the consumers.
I agree. And I always believe knowledge is power when it comes to our potential buyers, our move-up buyers, our first-time home buyers, our investors. Knowing the latest and greatest products is super important, but also, our politicians that really are on the Hill and making executive decisions for our country, really important for them to also understand the challenges that we are facing in our industry. So I just had such a lovely time, and I'm so excited to hear your perspective. I really believe, championing on behalf of the California MBA, especially our state that's just really not affordable, unfortunately.
Exactly. It's one of the most expensive states, which is somewhat understandable being the third largest economy in the world. But there still
Right.
has to be a balance, right? Like you can't have a
Absolutely.
focus on one side because then you lose the yang to your yin, if I may say, right?
I think we've
Um,
lost a little bit of the yin to the yang in our state when it comes to affordability. Totally agree
yeah.
with you.
Yeah. So let's jump into this conversation because I know we could sit here and talk for hours, but we unfortunately would lose some of our listeners if we talk for, well, maybe not. We'd make it entertaining, but nonetheless, let's dive in. We talk a lot in this industry about affordability, access, and inventory, but those words start to feel a little abstract. From your vantage point, Nora, working boots on the ground, directly with community lending services, community lending solutions, what are families actually facing now when they try to move from wanting to own a home to actually being able to do it? What is the biggest challenge that you hear from those consumers?
That's such a great question, Paul. I just flew in from having some advocacy on Capitol Hill. You and I flew over to Atlanta, Georgia, and put together a really great first-time home buyer financial literacy event. And a lot of the feedback I was receiving was, Nora, social media says, it's not affordable to buy a home. Interest rates are high. There's no inventory. But also, I was starting to hear perspectives basically saying there's no hope for me ever to purchase a home. And I think our industry is up against some of the biggest challenges is providing real information in real time and dispelling the myth. You don't need 20% down. You know, there is a high interest rate market right now, but not historical high by industry standards. And sometimes saying that puts things into perspective. Paul, one of the bigger strategies that I'm using right now is not talking about interest rates, but comparing their rent payment to a PITI with MI payment. And I have to tell you, when we do that, when we pre-qualify at these first-time home buyer events, or, and it's not just for first-time home buyers, we have repeat buyers showing up saying, I can't wait to move up. I've got to move up. My family's expanding, and, definitely millennials are creating household formations, are having children, they're getting married. And that is definitely relative. If we think about these millennials in age, most of these millennials, the older millennials, are turning 46. So the conversation is definitely relative. Now, what's interesting is when I stop talking about interest rate and start talking about what the payment looks like and compare it to their rent payment, they have aha moments. We had pre-qualifications in Atlanta, and a lot of the buyers were saying in the room, oh my gosh, I think I can afford a home. And they were shocked that they were actually mortgage ready. Now, I said something to a family. I said, why are you shocked? I said, you've been a historical renter. How many years have you rented? And someone actually said 19 years. And I said, imagine having rented for 19 years. You would only have 11 years left on a 30-year mortgage. And they said, oh my gosh, I should have pulled the trigger. I should have done this so many years ago. But again, Paul, knowledge is power. Getting that information in real time and having that consumer have access to resources, real information. And I was talking about loan programs to these families. And when I said that, I was reading the room. A lot of these folks were like, what? There's down payment assistance. There's HUD counseling. It was almost like aha moments, So I think that consumer getting a lot of really great information on what our industry has done to overcome affordability is important and relevant.
I think you just hit the nail on the head. I will say that I was a producer, right? I was a loan originator. That's how I broke into the industry. And oftentimes, if somebody came to me back then, and I would assume this still happens now it might be changing a little bit more with the advancement in technology, because I started in the industry quite some time ago. I didn't have gray hair back then. I didn't know about all of the down payment assistant programs. I didn't know what Freddie Mac had to offer. I didn't know, some of the solutions for, there's a lot of community lending programs out there, right? So a homeowner that is struggling to gather the down payment, or a homeowner that's unaware that, a couple of counties away from where they currently live, there's affordable housing, right? How does a homeowner actually access this information, or I'm sorry, a potential homeowner access this information if their current lender or somebody they're working with doesn't have it at their fingertips? Where do they go? I think that's the biggest gap, because a lot of lenders are not the guilds of the world, right?
Yes.
And a lot of lenders don't have the fabulous Noras running around saying, let me help you, let me focus with a group of originators, or a pack of consumers that are really looking to make a difference in their families and want to own a home. So resource, I think, is, as we talk about accessibility, we talk about inventory, but it's really the resource and understanding what they can do and where do they go for those resources.
Paul, let me close that conversational gap for us in our industry. Sometimes these potential first-time home buyers or repeat buyers don't know where to go. And I have to tell you, I solved that gap when I was at Freddie Mac. And I kept telling, my leaders, hey guys, we have all the amazing partners in the housing ecosystem. When I got to Guild, the first thing I did was say, I got to bring the housing ecosystem to the communities that we serve. So who is that person that a potential first-time home buyer, a potential move-up buyer, a repeat buyer, an investor, someone who needs a reverse mortgage, and I think age demographic here, where do you start? Well, I have to tell you, social media has really bad information out there.
Yes.
There's a lot of folks
Stop
sharing.
looking at social media. Get off
Yes.
Facebook.
Yes. And something I also educate them on is, listen, mom and dad haven't bought a home maybe in the last 10 to 15 years due to lack of inventory. They may not know all the new programs that are out there. Like you mentioned, those affordable programs, down payment assistance programs, the grants. How about these amazing grants out there, Paul? I'll talk about a grant that we have at Guild that I'm so proud of. And so who should they go to? Well, let me tell you who my number one partners are when I put or host these events. It's HUD counselors. Paul, HUD counselors are actually helping buyers, repeat buyers, existing homeowners to have sustainable homeownership, to have that education so that they can stay in these homes. And I have to tell you, I have the largest partnerships with them. I have to tell you, I have always been a really huge proponent and champion of HUD counselors across the country because I've done really great work with them. They travel with me. They meet me at these community events. And when we pre-qualify a buyer and they're not mortgage ready, I hand off the relationship and tell the HUD counselors, hey, this buyer is not mortgage ready because X, Y, Z, debt to income, FICO, maybe assets, maybe haven't been in their jobs long enough. And the HUD counselors take over. Now, Paul, what's really interesting is that a lot of our industry underutilizes this amazing resource. So as an industry, we're underutilizing it. Imagine these potential buyers that are out there with bad information. We haven't dispelled the myth. And if we don't bring the housing ecosystem to them, they won't know who the valuable partners are.
Yeah. Like you said, knowledge is power, and it's the unknown. And I would venture to say a lot of the individuals, let's say you were talking about the group at Atlanta, a lot of those individuals, I've done some studying and in preparation for this conversation, it's generational. So if the generation before your current prospect or audience didn't own a home, most likely that generation doesn't own a home. And so because of that, there's a little bit of a fear factor. And, if you don't know, you just don't know. So your statement of knowledge is power, super spot on. But I think it's about how do we get that information to the consumer so they know? And who knows, maybe at one point in time, the consumer will educate their originator on, specific programs, which would be fine either way, right? It doesn't matter how you get to the end result of supporting homeowners. It's really powerful when you think about the solves at your fingertip and you just don't know it. You just don't know it's right there.
Paul, and I have had families tell me, Nora, grandma and grandpa did not own a home. Mom and dad did not own a home. I don't know the first step to be able to qualify for a mortgage because it was, financial literacy was not a conversation in certain homes. But also remember, universities are not teaching financial literacy. I'm an ambassador to Freddie Mac's award-winning financial literacy curriculum. It's actually called Credit Smart. When I got to Guild, I brought that curriculum over to Guild and told my now friends over at Freddie Mac, I need to really get a lot of loan officers certified because we have to go, into these markets and start teaching financial literacy. Yeah. So Paul, when we put these events together, we're teaching that financial literacy curriculum. Now, I do have to tell you that platform is online. It is free, it's in several languages. If there's buyers that are actually seeing our podcast, please, feel free to, Google this information. It's Freddie Mac Credit Smart, and it's for military. It is bilingual. And I have to tell you, if you're watching this and you follow, me on social media, check to see if I have a financial literacy event in your neck of the woods. I'm hosting, Paul, just so you know, over 50 financial literacy events myself all across the country in so many of these accretive markets that you mentioned earlier.
It's good for you. Thank you so much for the work that you do. It's inspiring. It's needed. You're a huge advocate for the industry in supporting bridging the wealth gap and supporting consumers that want to own a home, and how do you make that happen? Now, as we're talking, we're dancing around this one question I want to get to you. We've talked about advocacy, our time at National. You've talked about your time at Freddie Mac, and what you did there. How do you think about the relationship between advocacy and action, right? So Freddie Mac, GSE, closely tied, obviously, to the federal government, and the work that you do at Guild. And during our time at National Advocacy, how do you bridge that relationship in your mind? In other words, what has to happen for a good housing idea to actually become something that helps real borrowers that are not looking for a handout, but a hand up, that want to do the work? So those that participate in your symposiums, right? Um, how do we bridge that as a community, as an industry?
You know, recently, since joining Guild, I can now reach out to local politicians in some of the markets I serve. I invite them to come to my events. I share data and analytics on affordable housing, on challenges, especially in their districts, in their states. I've actually had Senator Tim Scott show up in Columbia, South Carolina. He sent, some of his team to one of our financial literacy events, and they did a phenomenal job of speaking to their community, their constituents. I reach out and actually have partnerships with council members across the country. I think of Councilwoman, Tarsha Jackson in Houston, who came up to me at one of my financial literacy events and said, you know what, not only am I grateful to be here, I want you to come to my big housing event because you guys are the experts. You are the ones that are doing the work. And Paul, when we show them the gap, in their community, in their district, to their constituents, it also becomes very eye-opening. I love follow-up, meetings with them to share with them, hey, by the way, we have affordable programs, but it's just not enough. Paul, in our industry, I think of AMI limits. I cannot stop championing on AMI limits because we need to increase them. That's also a huge gap. So I share, I always cite really good information out in the housing industry. I talk about, labor market. I talk about, income for potential buyers. And I talk about that gap in affordability and how some of these programs just are not reachable to the missing middle. I'm working right now on a huge initiative. It's called Workforce Housing at Guild. And I have to tell you, I've reached out to so many. Right now, I'm starting with the teacher unions. I think I've got 22 partnerships with teacher unions across the country, sharing information of not just financial literacy events, but the programs that we have to help teachers. Just off the top of my head, I think of 11 immediate programs that can impact teachers and allow teachers to be able to live in the communities that they serve. I saw a recent study and it said most teachers across the country in unaffordable markets live as far as 44 minutes away from where they serve in these amazing communities. We can start with our teachers. I think of our doctors, our police, our fire, a lot of these amazing city servants that can't afford or don't know where to start to be able to live in the cities they serve. I think that's really important. So definitely a partnership with politicians. I think of Hawaii. Nobody really goes into Hawaii and says, hey, this is a market I want to really impact. I have to tell you, when I joined Guild, I said, you guys, that's one of the toughest markets in the industry. Many advocates are not there. So I really dove in, California, Hawaii, Florida, these markets that are just some of the hottest markets in the industry. What happens is we turn around, we focus on easier markets because it's just quick market penetration, which I'm all about, absolutely. But also, let's start championing and educating our local politicians, members of Congress, members of Senate, locally in their neck of the woods, in their districts. And I think that becomes a conversation, where all of a sudden they're reaching out to me constantly saying, hey, I'm working on creating a program, can we share this information with you? And I'm all about it, absolutely.
That is, I think that's such an eloquent answer. No shock coming from you, but I love your examples of, I said boots on the ground before, with the financial literacy symposiums that you give, and going to these locations and being there and talking to these potential homeowners, these people that really want to buy a home, and educating them on how to do it with HUD and other GSEs, et cetera. But to reach out to the community leaders on the government side, that's so brilliant, because you're 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 putting your work to use and showing those that are in the government office, the assembly members, whatever the case may be, whoever you happen to invite, this is what's occurring. This is what's actually happening. So it's not that noise. You're not creating noise. You're actually doing the work. And I think that's huge, because not too many people actually do that. So again, congratulations on how you're going about this. And I know you're creating enormous impact in education. Now, as we talk about accessibility and we talk about um, individuals that want to buy a home and maybe just aren't ready, I want to touch on something, and this might be a little touchy, but I want to bring up the subject of expanding access responsibly, right? And that is something that's on the forefront of everybody's mind when we talk about affordable housing, for first-time home buyers or those that want to re-enter home ownership. There's always this tension, I believe, in our industry between expanding access to credit and expanding access to credit responsibly. And so the best leaders I know do not treat those as opposing ideas. How should lenders think about broadening access in today's market? Interest rates are fluctuating up and down, and I don't think that's going to stop anytime soon. Housing prices they're not going to drop, nor do we really want them to. So without comprising long-term sustainability for the borrower, how do we ensure that we're expanding access to credit in a responsible manner? I know there's no formula, but how do you talk to other lenders and agencies about that, Nora?
I learned so much about this exact topic when I was at Freddie Mac, seeing how housing policy was developed, new loan programs. I was really a part of those conversations. And let me tell you, sustainable, responsible access to credit is important it should be important to our entire housing industry. Paul, you and I lived through the 2007 mortgage crisis. We saw so many homeowners lose their homes. We saw so many buyers not be able to purchase for many years thereafter. We definitely don't want a repeat of that. But let me tell you, when it comes to sustainable homeownership, I'm a champion of teaching that borrower through maybe an 8-hour course. A lot of those affordable programs like FHA has and HFAs, down payment assistance programs, and Fannie and Freddie, the GSEs have, require that HUD 8-hour class. That really level sets and educates that buyer of, listen, you've got skin in the game now. You're not, you really have to make sure that you raise your hand if you're not able to make that payment and reach out to your servicer. You really, I think educating, it starts with the consumer first, them understanding what are the resources out there if you get into trouble. But also, when it comes to developing programs, I'll be honest with you, I am very careful about championing any type of programs that, maybe will not help a consumer keep their existing home, or, that will help a consumer maybe gain, wealth accumulation. Some of these programs, there's times where I'm, a little more of, I want to learn more about
Yeah.
programs before I'm, able to champion them as a potential program for
Right.
us here at Guild. I mean, I work in capital markets. Right now, my boss is David Batney. He's just so amazing at creating programs for us here at Guild,
Right.
championing them and getting terms of business with, the GSEs, with the FHA, and just different investors. But I'm also cautious not
Oh,
to
yeah.
put out a program out there that will be irresponsible, or will, hurt our industry. Now, let me tell you, in retrospect to that, I have to tell you, we have such great programs out in our industry that are maybe underutilized. I'm going to share a program, that I hope to bring to California soon. Actually, David Batney's probably already working on that, but it's a shared equity program. It's called Homium. It has been so successful in Detroit. I now have about 22 housing partners in the city of Detroit. I've got the Detroit School Union championing this program, and it's a 40% shared equity program. And there is no payment on the second. There's no monthly payment on the second. And it really helps consumers that have been waiting on the sidelines come into housing so much sooner. They are going to repay that program, when they refinance or sell the home. But it is responsible lending. It's very outside the box.
Yeah.
And it took David Batney a few years to champion it through the GSE. So, I believe there is some room for new innovative programs, that maybe aren't just our traditional, put 5% down. Paul, what's interesting is a lot of these consumers think that they need to still put 20% down. And, I think as an industry, I'm not sure how consumers still think they need to put 20% down. There's great programs out there. We as an industry just have to be very responsible in how, we create these loan programs. And, let me tell you, risk to our industry is definitely important for us to focus on.
I think, it's really interesting. I knew we could go on and on. I could ask you like 20 more questions. I think it's really interesting though, when you talk about consumers and still a myth of putting 20% down. I swear even though it happened, a decade ago, there's still a lot of consumer sentiment that falls back on the financial crisis and people getting into the homes with no money down, and they don't want to be in that position. I've had those conversations, with individuals, even though I'm not originating, when people ask, what do I do for work? And I let them know, as being the CEO of the California MBA, we're here to advocate for the industry and the consumer, and ensure that proposed laws, the individuals that create the proposed laws, the assembly members or congressmen or senators, they understand how they affect the industry and the consumer. And more times than not, if I'm talking to someone that doesn't own a home, I get the same response. Well, it's how is a homeowner supposed to come up with 20 or 10% down? And if you go down the path of that's not needed, there's this myth that individuals that got into homes with less down is what created the financial crisis. And that's where that conversation about responsible access to credit comes into play. And I think that organizations like Guild that are so strong, conservative by nature, meaning, it's not a chop shop, right? The programs are vetted and you said 2 years with the earned equity or the
Yes.
equity share program. Um, I think it's important for the momentum and the voice to get out there more and more so people are educated. Going back to your original, it's about, you know, it's about empowerment and ensuring that people are educated so they feel that. I cannot wait to do more research on the equity program you were talking about. I've always been a firm believer in a program that helps bridge that first-time home buyer to create wealth in that first-time home buyer home, in a way of sharing equity and then that being paid off, and you get the equity and you get to move up. Because it's, I remember when my husband and I bought our first home and sitting back and, scrimping and saving and doing an FHA loan, 3.5% down, and then realizing once you're in the home, oh my God, you've got this equity, and it levels up your financial gain and your credit and your assets. And so these programs that you're bringing to market are just so supportive, especially now where affordability really across the nation has become a conversation of where is it? It's becoming harder and harder. And that's not just because of the interest rate increase, but it also has to do with just the cost of living expanding. So, such a great conversation. Thank you so much. Um,
Yeah. Paul, I think of a couple of also, factors that are not mentioned so much in our industry. Remember, we also have age demographics that are impacting kind of like our industry. Think of this. There's all these millennials out there. According to Freddie Mac, 50 million haven't bought a home. But we also have the first cohort of Gen Zers that graduated college last June that are now, working up into immersing themselves into the workforce. They're going to need housing. So I think the demand is just also getting larger. And then we have this lack of inventory issue. Then we have the affordability issue, and then we have the interest rate market. So it's a lot of moving pieces that we have to kind of navigate as an industry and, help buyers get into homes. And I have to tell you, most of the time, I have a lot of buyers who say things like, I never thought I would qualify, or I never thought, that I would have access to be able to purchase a home. And it's so rewarding when they do.
yeah, it's layered. It's absolutely
That
layered.
is, yeah.
Yeah. So, and I think to your point, it's it becomes so self-serving, the work that you do, and really empowering potential homeowners with, I I'm going to be careful in saying this, but I'm just going to say it. You can do this. And quite frankly, you deserve to. So we're going to
Yes.
work on a way for you to be able to do it. And if it doesn't mean you can do it today, it means you can do it in a year. You still have to
Oh,
stick
yes.
with that path, right? Like, and so it does become a two-prong approach where the industry is there to support these individuals that want to own a home, but the individual also needs to be there to support themselves and realizing there's work involved. When we were talking before, you and I both made reference to hand up, not hand out, because then those are the ones that really want to be there. So what an inspiring work that you do. What an inspiring conversation. Um,
Thank you.
Thank you so much for everything that you're doing to help move the needle and keep the industry moving forward. To me personally, it means a lot. I know it means a lot to our association and the industry. You're a fabulous beacon of light. So
Oh,
thank
thank you
you.
so much.
And thank you for being here today. Um, to our audience, thank you for tuning in to another episode of Connect. This is exactly why we have these conversations, because the future of the industry is not built in silos. It's built through alignment, innovation, and execution. And the work you're doing is all about innovation. So thank you again for being here. And until next time, stay engaged, stay sharp, and keep building with purpose. Thanks again, Nora.